Hello everyone. The market has been very volatile recently. Intel was once seen as a leader of the AI and semiconductor company with a strong potential, but stock price dropped very sharply after the earning report. Micron, which has received a lot of attention because of AI demand, and SanDisk as well, a data storage company, have also been large price drop recently. All the like Nasdaq falls sharply and all the stocks you own go down at the same time. Even opening your stock account, investment account can make you feel scary now. The pain can be even greater if most of your money is in one or two stocks or if you use leverage or options. But today, I'm not going to talk about which stock you should buy or whether this is the bottom or which stock may rise next. Today, I want to talk about something more important: how investors should think and act after losing money. To be honest, it is not difficult to feel confident when the market is good. When most stocks are rising and your account is making money, anyone can feel like a good investor.
Yes, definitely.
But an investor's real ability is tested when the market moves in the opposite direction. Intel may fall after giving a weaker outlook than investors expected. Micron may report strong AI demand but still fall because the results were not good enough for the market. SanDisk may drop because of concerns about NAND flash prices or stronger competition. When this happens, investors quickly feel fear and regret. You may ask yourself, why didn't I sell earlier? Why did I invest so much? Should I sell everything now or should I buy more at lower my average price? These feelings are very normal. However, depending on how you act during this emotional period, the loss can become an important lesson or the beginning of a much bigger failure. Most events in life are not completely good or bad by themselves. Something that feels like the worst event today may become an important turning point a few years later. On the other hand, something that feels like the greatest luck may later create unexpected problems. Investment losses are the same. Imagine that you lose $10,000 in the stock market. At that moment, 10 grand is gone from your account and the value of your investment is lower. Your brain will quickly judge this as a terrible failure. But whether this loss remains only a painful memory depends on what you do next. If the experience pushes you to study financial statement, stop putting too much money into one stock, reduce average, and create clear rules for buying and selling, then the 10 grand loss may become tuition that helps you avoid losing $50,000 or $100,000 in the future. The opposite can also happen. What if you become obsessed with recovering the money immediately? You may borrow more money, but options that expire soon, keep buying more of the losing stock, or searching for another risky stock that could double in few days. A loss that was manageable at first can grow into a financial crisis that affects your entire life. The first loss may be the same, but the result can be completely different depending on what you choose to do afterward. In the end, your future actions can change the meaning of your past. So if you're losing money now, do not focus only on the fact that you lost money. Focus on what you will change because of this experience. When people suffer from investment losses, they often want to remove the pain immediately. Some people check their account dozens of times a day. Some blame analysts, the Federal Reserve, short sellers, market makers, company management, YouTubers, or influencers. Others try to forget their fear through alcohol, gambling, emotional shopping, or even more dangerous short-term trading. But these actions do not solve the original problem. In many cases, they make it worse. The fear, anger, and the frustration you feel after a lose are not only pain, they are also powerful form of energy. Negative emotions make us tense and push us to take action. When we eat good food or watch a fun movie, we may enjoy it, but we do not always take action afterward. However, when we receive rude service or buy terrible product, we often write a review or contact customer service right away. Negative experiences often create stronger action than positive ones. That is why you should not use energy from an investment to lose to destroy yourself. You should use it to improve your life and your investment habit. So, what should you actually do? You do not need to suddenly study investment for 12 hours a day or try to become a professional investor in 1 week. In fact, if you start studying too much right after a lose, it may look like education, but you may really be searching for a stock that can quickly recover your money. If you read one article and then immediately check your account or watch one investment lesson and then search for the highest return option trade, that is not calm investment education. It is emotional trading covered by the name of studying. Learning about investing is similar to take care of your health. You do not become healthy by exercising for 10 hours in one day after receiving bad medical results. You need a habit that you can continue for months and years. Investing is the same. Small improvement repeated for a long time are much more important than intense effort for only a few days. For investors who are suffering from large losses, I recommend two habits. The first is exercise. Walking, running, cycling, or swimming is especially helpful. After losing money, many people sit in front of screen all day and watch stock prices. Even a small price move can make their heart beat faster. Their body becomes tense and every small rise or fall feels like a life-changing event. Exercise helps break this cycle. It gives your body a healthy and productive way to use the stress created by the loss. The second habit is writing a journal. Investing is a decision making process. You receive information from the outside, analyze it with your own thinking, and then decide whether to buy, sell, or do nothing. The quality of financial decision depends less on how much information you know and more on how well you judge that information. Many investors search for secret information, special indicators, famous investors' stock picks, or strategies that never fail. But even great information cannot create a good result if the person receiving it cannot think clearly. Two people can look at the same earnings report and reach very different conclusions. One person may only focus on revenue growth, another person may notice falling profit margins, rising inventory, higher debt, capital spending, and weak guidance. The information is the same. The difference is the ability to understand it. Writing helps you see your own thoughts more clearly. Thoughts that remain only in your mind are often incomplete. They appear for a short time and then disappear. But when you write the thought as a sentence, it becomes something clear and real. That sentence can then lead to deeper thought. For example, if you bought Intel, write down why you bought it. What made you believe Intel's foundry plan and manufacturing strength would improve? What signs would show that your idea is correct? What situation would make you admit that your investment idea was wrong? You should also honestly ask whether you bought the company because you believed in the business or simply because the stock had fallen and looked cheap. Writing an investment journal also makes it harder to change your past story later. Without written record, people often tell themselves that they always plan to hold the stock for 5 years, that they knew it was risky from the beginning, or that they planned to sell at a certain price. But to be honest, most of times you didn't. You did not know what is the reason when you bought a stock. If you write down your thought before buying, you can later compare them with what actually happened. An investment journal does not need to be complicated. Before making a major investment decisions, answer 5 questions. Why am I buying or selling the stock? What facts support this decision? What situation would prove that I'm wrong? What is the maximum amount I'm willing to lose? What change would make me change my decision? Then, when the stock moves sharply, read your answers before making a new decision. Everyone has the same 24 hours in a day, and our bodies age at a similar speed, but mental growth can be very different. Some people repeat the same mistakes for many years. Others continue to review their actions and decisions and slowly change. Getting older does not automatically make a person wise. Wisdom comes from looking back at your experiences and thinking about what they mean. When you look back at a decision you made several years ago, you may feel embarrassed and wonder how you were once so confident. But that is not something to be ashamed of. It is proof that you have grown. The goal of investing is not to become someone who never makes mistakes. That person does not exist. The important goal is to admit mistakes faster, limit the damage, and avoid repeating the same mistakes. An investment loss can become one of three things. It can become a valuable lesson, it can remain meaningless pain, or it can become the beginning of much bigger disaster. The result depends on what you do after the loss. Use the energy from the loss to improve your health. Use it, organize your daily life, create an investment journal, and set limits for how much you can invest in one stock and how much you're willing to lose. Use it to understand the difference between investing and gambling. Most importantly, use it to become someone who can follow clear rules no matter which direction the market moves, instead of someone who can only feel calm when the market moves in the desired direction. Stocks will continue to rise and fall. There will be new earnings report, new Federal Reserve meetings, new AI trends, new fears about recession, and new companies that seem ready to change the world. We cannot control these events, but we can control how much money we put into one stock. We can control whether we use leverage. We can control how much we study, whether we follow our investment rules, and what kind of person we become after experiencing a loss. One day, you may look back at this difficult moment and smile, not because losing money was enjoyable, but because the experience helped you create habits and rules that change your life. Your future actions can change the meanings of your past. Please take care of your health, protect your investment, and remember that becoming a better investor starts with becoming a more disciplined person. If this video was helpful, please hit the like and subscribe to the channel. Also, please leave a comment and tell me the most important lesson you have learned from the investment to lose. Thank you for watching. See you in the next video.